Much of the weakness in the market coming in from bank stocks, whether you're looking at private sector lenders or public sector lenders, this has been one of the biggest sore spots in the market. Well, let's carry the conversation forward now. We are joined by Parag Thakkar of HDFC Securities. Parag, thank you so much for being with us this evening. I want to get your sense on the very sharp fall that we've seen and on the takeaways from the Minister of State for Finance conversation that we've had, where he seems to be reassuring that the government has a grip, has a handle on the NPA problem.
Right. So my view is that, as we discussed last time also, that there's a time for investors to start SIP in banks.
Okay.
The valuations are so compelling that if you take a longer term view, you cannot lose from here. The only thing is that investors has to be satisfied that, if some bank is saying that, okay, I'm done with my all NPA provisioning and this is it. Whether I report loss, profit, investors will not care. On that day particularly, that stock might tank because it has reported loss.
But Parag, that's the thing, banks aren't saying that. ICICI Bank has again told us that at least one more quarter before some of the final RBI cleaning is over.
So that is why I'm saying the bank should show a very brave behavior over here, and they should take a hit and clearly give a signal to investors that it is all over now. And then I think because the levels are so compelling that and see for ICICI or Axis 40% of their book is now retail. Of that 50% is mortgage. So that 40% of the book is going to grow at about 20%, and there is no big risk over there of the asset quality. So on the corporate side, if once they clean up, there's a great opportunity. And if suppose in PSU banks, the other issue is capital. So if government is working on that part also, then PSU banks are even more attractive.
But, Parag, I get that you're being optimistic in this market, which has been so dismal. But I want to talk about today's fall, because today we really outperformed every other market in terms of the way in which we fell. Asia wasn't doing that bad. Yes, Europe was wobbly, but it wasn't that bad. The manner in which the selling is coming back, are we going to be retesting or perhaps even breaking the previous low?
So that's what I'm saying. You have to gradually accumulate in this market. You don't have to commit your entire capital at this point. Why I'm saying this is because, see, you cannot, see, there are so many uncertainties. See, the way gold is going up, the way bond yields, US bond yields are declining.
Yeah.
That means market is pricing a lot of risk. And that risk comes from lower commodity prices. As we discussed last time also, that if crude remains at these levels, there can be some bankruptcies across the world. You never know. There are so many commodity producing countries, companies, which can go, which will not be able to service debt. So all this, and clearly gold going up, US bond yield declining are clear signals.
And that's happening even today. In fact, as we speak, the US market's been down. We've had the US 10-year fall further below yesterday's level to about 1.83 last I checked it. But one more point of concern, second day running to see a net sell figure from the DII fraternity. That was the only saving, pillar of strength for this market. It's not a big sell figure, but is it something that's worrying you?
So I would not worry much, because the point is that at least I have my clients and I've talked to them every day, and nobody will sell at this distressed prices. It is only, just because, the cash levels were very low in the system. So they are raising some sort of cash. And once, hopefully, once the inflow starts, I think this selling will stop. So I think it's a temporary phenomenon in my view.
Okay, all right. Well, that's the hope. On that note, let's quickly do a check on how the currency has fared. Lots of earnings analysis and expectations out there. But at least within the blue chip space, which are the earnings that have stood out for you, because of which you're thinking of taking some kind of a call, either, clearing something from your portfolio or maybe something that's inspiring confidence for a fresh purchase?
So basically, you see, Infosys started on a very good note. Infosys, Reliance, Grasim on a standalone basis reported very good numbers, which is a good turnaround. Up till now, Grasim was not doing well on the standalone front, on the VSF front. These were positive. Asian Paints reported very good number. On the disappointment side, Maruti disappointed on the margin front.
Would you advise staying away from Maruti? Lofty valuations, a bit of wobble in the...
It might correct a bit, but overall it remains a secular story, no doubt about it. So it's a great buy on dips.
What else are you buying? Before we let you go, quick assessment of the market.
No, so in my view, the structural themes remain. So in the large cap space, something like Power Grid or banks, where I see huge value, or something like Grasim. And on the mid cap side, definitely three key themes, as FM has already said. This budget is going to focus on infra, irrigation, and agri productivity. And because rural India has gone through a lot of distress and 2 years of drought. So I think these are the 3 key themes where I'll focus.
All right, Parag, good having you on the show this evening. Thank you so much for joining in. Time for